Hello guys, welcome to another breakdown. So I want to break Crash of 100 so that you see the opportunities that I'm looking forward to in Crash of 100 for this week, and I can also say for the rest of this November as we're getting into December. So always start from the daily. That's where you can get an overall picture of what's going on. So basically on the daily, all I need to do is identify overall what is happening on a major perspective, right? So if you notice that we have been establishing these uh, lower lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Uh, this was a major break of structure right here, major break of structure there, like this. So basically, basically we've been downtrending or we've been in a bearish order flow on Crash 500. If you notice, we've been in a bearish order flow, right? So it kept on breaking structure, establishing new lower highs, new lower lows, like that. That's a break as well, break of structure as well. So that was a continuation of a bearish order flow. So even if you wanted to harness or take advantage of it, you would have actually taken advantage of all the sales coming down. All the swing sales coming down, you would have taken advantage of them, especially on these zones that I'm marking like this. Those were opportunities where you could have actually entered your trades or your sales. So when you zoom in like this, right? So this was our previous uh lower low there, with our lower high being this one, right? So you can see that on the daily, you can see that externally they are still in a bearish uh order flow type of way, right? So on the daily like this, the good part about it now is that when you go down to lower time frames, you realize that they've already shifted down here, which is a good indication that they can actually give us a slight pullback to the upside, maybe come back to these levels right here. There's supply there. There are levels that are up there. So even this going down, you could have harnessed and maximized all these swing sales. Those were opportunities that you could have taken advantage of. For example, here that was in August there, even all the way from the top there, just by it tapping into this major point of interest like this, which was actually in February this year, right? Tapped into the zone. You just go to a lower time frame, whether it's 4 hour, 1 hour, you get shift in order flow confirmations. Once they shift there, then you take yourself from there, targeting this low. That was a major from there to here. After you get that opportunity, you can wait for structure to form, structure to give you this shift. Once you get that shift, you now have a lower low. Once you now have a lower low, the market will go up, meaning even this counter trend, which was this counter buy, you could have also taken advantage of it and caught some buys from here, even targeting this short-term target that was also a swing trade there. So even here, this drop, you could have also taken advantage of sales just by identifying the shift on a lower time frame perspective. You identifying the shift, you can actually get your sales from there. Same thing after this break of structure, they came to this supply zone. You could have also taken sales from there, targeting this low. You see? So you see how many opportunities there, how many opportunities that Crash 500 alone gave you this entire year, all the way from there. Major selling opportunities. Major selling opportunities were presented by Crash 500 this entire year of 2023. And what I'm about to show you the current opportunity that is there, the current opportunity that is there right now. So what I was saying about this, which was an opportunity that happened in February, early this year, as I said, you just follow structure. Once you follow structure, it will help you now to know that when structure shifts, what do I need to see? when I see something that I want to see, I just align myself with that. So in this case, they did a very interesting thing. They did a very interesting thing here. If you notice, they did a very, very, very interesting thing. So if you follow structure, if you are well versed in how structure operates and how structure moves, you you realize that this was a shift, inner shift. That inner shift, it qualified this as a high and this as a low, right? Because it broke that high like this. This was internal structure now. Because all you need is an internal structure shift. So they came here and actually established a change of character right here. After establishing this change of character, they came, wiped, uh, they wiped this level, right? Which was actually sort of like a fake move there. Fake this move, came back inside, then they went. So even here, after coming to the zone, without any what do you call this, without any candlestick rejection candles there, you could have even delayed to sell. Then you wait for this. Then after coming back inside like you also wait for them to come back into the zone, give you rejections like that. Once they come into the zone, once they come back into the region, give you rejections, you enter your cells there and notice where your major target. Your major target is way, way below down there. That's how you can maximize on these cells. So meaning for this entire time from February, this was 14 February, Valentine's Day to almost 10 March, which is almost a month, one full month of holding that cell. You could have even held this entire cell. Holding this entire cell, it also means that even along the way, remember, remember what I've taught you, that this internal order flow, once they've established a swing leg. So in this case, where is their swing leg? Their swing leg is up there. This is now their swing leg because it shifted internal order flow. This is their previous swing low, like this. Once they've established this swing leg, they will move internally in bearish order flow up until they take out their swing leg and establish a new leg. So internally, you're going to also follow structure. As you follow structure, all you are doing is you're maximizing on that bearish order flow as it will be coming down. You're maximizing on that bearish order flow or that bearish momentum coming to the downside. So that's how you would have also maximized on that crash 500 that started to sell from February there. So everything that was now happening in between, those are just opportunities to keep on scaling in, keep on scaling in. So as it was going like this, all you now need is an understanding of structure. Once you understand structure, even notice here, even inside here, as they were doing these inner shifts, that inner break here, right, or this inner slight change of character that happened there, it was followed with a pullback, which was okay. So all of those shifts in structure that were happening inside, those are opportunities for someone to scale in. That was a law, right? It being a law like that, our high is that one. We now need a lower low. This is now internal structure. Remember, internal structure will keep on being bearish up until they take out the swing leg. So you just follow structure. As you follow structure like this is actually the like this. That's where the shift happened, meaning that law that shifted there, which is this one. Someone can say this one is almost the same level, same law right there. Same law actually there, right? Same law actually there. Same law actually there, right? So they shifted there, established this. This was the break. This is where they broke. After they broke, they pulled back, as you can see. So them doing all this, you notice that as they were going up even here, they were going up in form of bullish order flow, meaning by the time they shift that bullish order flow right here, from bullish to bearish, you can also enter your cells right there, right? You can actually enter your cells right there as well. Then after this break, you can wait for a pullback. Here they tapped this, so they didn't need to go all the way up there, but they actually tapped the fair value gap, which was where you could have also entered your cells right there, meaning you're targeting this short-term target or that major target that I showed you on a higher time frame perspective. So all of these are selling opportunities that you could have gotten. This one, you could have caught it as well. So most people, they are not well versed now. Well, they're not well educated in terms of uh, understanding structure as it will be flowing like that, as the market will be going like that. And they actually make sure that they keep on repeating the same thing. They know that you won't catch it. They know that you won't catch it. They know that you won't catch it because you're not well educated in terms of how release structure operates. That was a low because it did this inner shift. That was a lower high. So from this lower high, you could have actually gotten nice sales from the supply there. You could have even gone to a lower time frame, 30 minute, 15-minute, gotten inner shift of order flow, gotten the sales there, targeted here, or even this major target that we are targeting. So this entire time, imagine for the whole month, you are maintaining one bias, which is a bearish bias. You're maintaining one bias, which is a bearish bias. Many people are busy trying to buy these pullbacks, but you are focused on where the order flow is. The order flow is bearish. So after finishing and taking out that swing leg, right? The most important thing is the creation of a new leg. This was a new leg, so we now need a new leg to form. The formation of a new leg can also present to us opportunities. The formation of a new leg can also present to us opportunities. Here they came, they didn't take out this. They failed to take out that, which was okay. So if you follow structure nicely from the daily, if you follow internal structure nicely from the daily, you will realize that where they did their inner shift is where we now have our new swing leg. Our new swing leg is going to be the new leg that is going to give us opportunities to the upside to create the new swing lower high up there. So that understanding alone is an understanding that most people they don't have and might never even have if ever they're not exposed to such depths of information like this. So you realize that right here, that's where the shift happened. On the daily, it's much more clearer. That's where the shift happened here. Here they tried, they couldn't take out this, so that's not a swing lower low. This is our swing low because it shifted this inner order flow from bearish to bullish. So even maximizing on this sell, you could have even followed order flow. You could have even followed inner structure. When you follow inner structure and as it will be breaking like this, as it broke that one, you could have shifted your stop losses higher there. Then as it broke there, you could have shifted stop loss higher. So meaning the more you follow structure, you realize that the more you can actually maximize on this opportunity. Same thing after this shift happened, this established this as a swing lower low. Once you now have a swing lower low like this, once you now have a swing lower low, market must go up to create a swing lower high. As you notice here, it actually presented a simple opportunity. After that shift came back to mitigate here, went up. This was a simple buy that maybe you could have also caught. Simple swing buy you could have caught from here, targeting this region here. So the real most important opportunity in this case is these ones that are going with order flow. This sell, as well as right now it's currently buying. Right now it's currently presenting a buying opportunity that I'm going to show you where I'm going to enter, where I'm anticipating to enter, and why. So all of that is it's understanding that you really need someone who has been there to show you, someone who has tested the understanding for them to show you that level of understanding. So this buy, you would have caught it. Mm, you would have caught it, drawn the zone like that. After drawing the zone like that, all you need is entry confirmations on a lower time frame perspective. Once you have those entry confirmations, you can actually enter your buy nicely from that level, from this whole entire region. So this entire region, I drew it based on the daily. That's why you see they didn't come to this demand, but they actually tapped that whole daily zone, tapped that daily zone, and actually started to fly. So all, all that you could have done in this case is just to go to a lower time frame, time frame, identify a shift. So in this case, if you went to a lower time frame and identified an inner shift, something like this, right? They shifted internally there, right? Or you could have even used the simple Fibonacci from this low to this high, from this low to this high, they came to this region. So this entire region was a very sensitive region. Very sensitive region. You could have also utilized that as your zone. So you could have used this zone actually as your zone. So they tried to manipulate the zone there by breaking out of the zone, but they couldn't fully take it out. They just faked out, came back inside the zone, which is not an issue. So right here, this inner shift could have given you buys from here. As the market came back here, if you notice, they failed to fully close below this zone. So this inner shift, this one, this inside shift right here could have given you the buys, which was these ones all the way to this level up there. We'd have taken those buys. So we're not talking about the buys for now. Remember, we're just focusing on where the order flow was going this entire time. So even right even when it comes to you identifying order flow, right? Even here as it was going up, you realize that this was a high because it shifted, it did this inner shift. This was a low. On lower time frames, you realize that that's also a high. That's a low, like that. So right here where they shifted the internal order flow, right? Where they did the shift of internal order flow, right there, that's where you actually manage to that's where you what you see this shift. This shift of inner order flow is what qualified this as our swing lower high. Once when I have a swing lower high like this, the market will drop to take out the previous swing level, which is this one. So this was a confirmation. This is just a confirmation. We've changed order flow. We're now coming down. Where was the entry? Entry was simple right there on this supply zone. You would have taken the sell from there, held all the way to the downside up until we took out our swing leg down there. This was a simple sell. Same thing with this sell, as they will be selling like this, internally they will be following what we call bearish order flow. As they will be following bearish order flow, you can also follow that bearish order flow structure and maximize on all the opportunities that they will present alongside that bearish order flow. So you realize that they were doing a very interesting thing because they were mitigating a lot of supplies as they were coming down, which was actually an opportunity. An opportunity. Those are opportunities. I can go to the 1 hour and map the structure for you so that you see how you could also maximize just on that opportunity as well. So you see that this entire year, how many opportunities you have been missing out on if you were not fully informed, and how much money you left on the table on this simple one pair that I'm showing you, which is Crash 500. This simple one pair, you don't need to trade so many pairs to make money in forex trading. You just need an understanding of how the market behaves and how the market behaves. Once you have that understanding of how the market behaves, you actually get to understand fully how to take trades on the market. So yeah, even if you followed order flow, right? If you're following order flow, right? If let's say you didn't catch that one from the top, all you need to do is follow order flow. This inside order flow, the same way we look at it, the same way we look at external order flow, is the same way you look at this internal order flow, right? So where was the shift or the break? The break happened here, meaning this was now your low. That's your low. And if you see they put back into a supply, then pulling back into this supply, you would have gone to 15-minute, gotten a structure shift on internal order flow shift, because on 15-minute, what they will be doing is as they were going up like this, they were going up in form of bullish order flow, bullish order flow. Once they tap into the region where they want to pull back on, uh they will shift that structure on 15-minute. So you realize that where did they shift? Inside here, they actually shifted somewhere around here. After they did that shift, that was a confirmation to sell. You'd have actually taken other sales here. Other sales, you'd have taken them there. So me taking a sell here, not only do I look at this previous leg as my target, my first target, that's why having an overall picture of what the market is really doing on a larger perspective is very key, because it helps you to maximize on certain opportunities that someone without understanding might not fully take advantage of. So this was the low, that was the lower high there. So this was now internal order flow. They maintain this bearish internal order flow up until they take out their swing leg like this. So after establishing this lower high, you can follow, you should trace inner structure, where inner structure will shift. That's your new lower low, which is right here. That was a new lower low. So even this sell, let's say you don't want to hold all the way to this leg. You can actually hold it as far as this inner lower low. After this inner lower low is being established, you can actually come out right here of those cells. So after you do that, you wait for market to pull back into a zone. the most important thing is not the zone, but actually how the market will respond in the zone. As it was going up, you realize that they were coming in bullish order flow like this, bullish, bullish. Then they shifted, then they kept on kept going down like that. So that shift that happened there, if you go to a 15-minute time frame, it will actually give you a simple pattern like this. So this is all you need to see on a 15-minute perspective for you to jump into those particular cells that you're actually seeing right there. So right there on this supply, you would have actually gotten other continuation cells. You would have targeted this previous, right? If you want just a short-term target, but having understanding will help you to maximize, meaning you could have actually also targeted this other level right there. So people can come and talk all sorts of things, talk of trend lines, breakouts, what, but that's not the real structure. The real structure is what I'm telling you now. This is the real structure and what is going on. So even if you entered based on a trend line, but you not having understanding of structure, it will sabotage you the next time you try to implement the same and whilst opposing structure. So many people here who trade trend lines based on trend lines. All you know is trend lines. If all you know is trend lines, you are not yet, you haven't started trading. You haven't begun, because they will always manipulate you over and over again. Someone could have bought here, bought here, bought here. Then they would have also bought because of lack of understanding, because they're saying we broke our trend line, so must buy, blah, 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 blah. But understanding structure is the real gist. So here you would have sold from there, followed inner structure as well, followed inner structure to maximize. If you follow inner structure to maximize, you realize that you would have held this trade all the way until this region, until down here, which was the creation of a new swing leg. That's how you can maximize. This is how personally I maximize on opportunities. You can hold a trade for so many weeks just by following that inner structure like that. So after establishing a new swing leg like this, all you need is clarity of structure on your 4-hour time frame like this, for example, or on your daily, right? So once they have established a new swing leg like this was confirmed by this was a 1-hour shift, but the real shift here is this one that happened on the 4-hour. So the 1-hour one led to this 4-hour one, establishing that as our swing leg. Once you now have a swing leg like that, the market will just go up to create a new swing leg to the upside. So here they tapped into this fair value gap imbalance. You would have also taken advantage of this, So as they will be going up, they'll go up in form of bullish order flow, bullish order, bullish order flow as they will be going up. Bullish order flow, that was a high, that was a low, like that. Here, they presented to you a buying opportunity on this demand. Not only do you draw the demand, but you also wait for lower time frame structure to give you that shift. Once they come into the zone like this, once they tap into a region or a zone like that, and you see a shift, whether on your 1 hour, your 15-minute or 30-minute, then you can actually jump into that buy, because remember, as they'll be going to create a new swing leg up, they will maintain that bullish momentum. The same way as they will be coming down, they maintain that bearish momentum up until they take out the new swing, the previous swing leg. So in this case, they touched the zone, they touched this zone. It's not really a matter of zones, but a matter of the response of the price in the zone. So here, as they were going up, they went up in form of bullish order flow. This was a high because it shifted this inner. Then this was a low. Where is our other new high? They didn't take out. So here, this high, it took out this inner, came back, fell to. So this was now the new inner structure that you could have actually been following, that you could have actually been trading this inner structure up until they create a new swing leg up. So right here, I can actually see a simple shift right here on the 1 hour. If you go lower, you can actually see it more clearer on the 15-minute. So that shift was the one that would have confirmed you to buy here. Buying here, you can target this previous. And if you want to maximize, you can follow the entire structure as a whole. So if you follow the entire structure as a whole, you realize that you actually get to maximize more than someone who is just following. So this was the establishment of a new high because it shifted inner structure like that. After that new high was created, it gave us a major pullback before the major continuation, which is not also a problem. You would have also maximized on the drop by this opportunity, as well as other opportunities that you find along the way. So as it was dropping as well, it was also dropping in form of bearish, sort of like bearish order flow, sort of like a bearish order flow type away, sort of like a bearish order flow type away as they were coming down into this region. So you would have also followed inner structure. Where inner structure shifted, that's where you could have also continued with the buys. Uh, they tapped into a zone, right? So after tapping into this zone, they did the shift right here. They shifted right here. So this shift right there could have given you buys targeting that leg up there, right? You would have taken buys up there. You'd have taken buys targeting that level up there. There was this breaker block that you could have actually entered simply on the breaker block, stop loss below it. Someone might ask, so what if it breaks the breaker block? If it breaks the breaker block, it breaks the breaker block. It means you just enter, you just take a re-entry around here, around the fair value gap or the order block, if ever it came there, right? So you would have taken the buy there. So following structure, following structure, they've actually held all the way up until they took out that. You'd actually held all the way up until they took out that. So the most important thing, your 4 hour structure and your daily structure, those are the very important structures, because if you don't understand those ones, if you don't understand what is going on there, these lower time frames, because of noise, they might actually confuse you. So yeah, even Fibonacci is a very interesting tool, because it actually also helps me to know, especially when you see the market coming into those 88%, 78.6 regions. That's why I know most of the shifts. If ever there's going to be an extreme swing, they usually come to those two levels up there. That's why I put them in red like that. So putting them in red like that, I'm just saying, you see, they tapped the supply, did whatever they were now doing inside, kept that supply, kept on coming down from that whole entire region or entire zone. So that's how you would have also taken advantage of those sales coming down. Lower time from confirmation plus whatever that you'll be seeing on the 4 hour as well. Would have also given you these cells. Taking these cells, you're targeting this swing leg, because once you've established a swing leg, how do you know that's now a swing leg? When they broke this, as well as when they gave us inner inner confirmation up there. That's how you knew that they had done actually a shift. Right here you can actually see that's a change of character. They change of character, they gave you a slight pullback. Where did they pull back? You could have also sold around this imbalance. You could have marked this imbalance as well as this supply. All other supplies up there were mitigated. That's why they didn't have any reason to come all the way up there. So after this change of character right here, you'd have actually entered cells as well there, still targeting our swing leg down there. Once the swing leg has been established or has been broken like that, they establish a new swing leg. After establishing a new swing leg, they do the same process over and over again. On the 4 hour, there's that internal structure, they changed it right here, meaning this is now a swing lower low. Once you now have a swing lower low, market will go up to create a new swing lower high up there. So even the going up, you can just follow order flow and follow structure. As they were going up like that, you would have simply followed order flow or followed structure. This was a high, this was a low, high because it did this inner shift, low because it did that inner shift. So once that inner shift happened, it made this a low. That was an opportunity for buys. You would have even bought here, targeting this level. You would have bought here, bought there, targeting that level, targeting that level. You would have bought nice buys there, nice buys. Those are beautiful buys that you would have actually taken advantage of. So they did this, they did this high, this low, inner shift. This was a high. So did they do an inner shift here? You can see sort of like a shift right there. So let's go to the 1 hour. Most of these inner shifts, if you can't see it properly on the 4 hour, you just go down to the time frame lower than that, which is exactly the 1 hour. So on the 1 hour, they actually did. So as they were going up, they were maintaining bullish order flow. Then as they were be coming down, they also maintained bearish order flow. That was our last high. because it did this inner shift. This was our last higher low. Where that higher low was taken out, that's where we know that we've now established a new swing leg. That's a new swing leg that would have been established. So once they've established a new swing leg, what does this mean? It means that we are now coming all the way down to take out our swing leg that we left behind. So after doing this, after breaking this structure, they established what did they establish here? They established a new level. You can see this is also a high, right? Like this, because it did this inner shift. So they were actually mitigating as they were coming down, mitigating. They mitigated this, came back here, mitigated this. As I said, they never came back. They never even came back to mitigate most of those levels up there because they'd mitigated them already. So even after this change of character down, remember you're targeting your swing leg now down there because with that level that will shift internal bullish order flow into bearish. That's your swing leg targeting this swing leg down here. Meaning we're going to maintain a bearish perspective or a bearish bias all the way up until take out our leg down there. So structure is very important. Your low was this one because it did the inner shift. So where this inner shift happened, that was your low, like this. This is your breakout structure down there. After the breakout structure, your new low was this. Did the inner shift. This was your lower high. The breakout structure could have extended this. They failed to break there. So all they were doing, they were just playing around with people's minds to see who knows structure and who doesn't know structure. Market will always test. There's a test of knowledge and understanding that will always be presented each and every single day by the market. Right here, if they fail to take out this leg, that level is still the one that will still be holding. It's actually an advantage to you because no matter how much they play around like this, you still have the same levels. You still have the same levels. This is still your previous lower high. We don't anticipate this to be taken out before we take out our swing leg. So meaning even if they came back here like this, that was an opportunity for you. That was actually a selling opportunity for you. So even here, this drop, how could you have taken advantage of this drop? Not only by tapping into a zone, they tapped into a zone, yes, but that's not the real important thing. The real important thing is the shift. As they were coming up like this, after establishing this leg, they come up like this. Where did the shift happen? Right here. They shifted, then they came back, then they dropped. So meaning your sell either caught it from there. If you didn't catch it from there, this was mitigated. That's why they never came back here. So meaning the next level that you're anticipating, you're looking forward to this supply zone right here. You're looking forward to this supply region right here. Came into the supply. So you could have even entered your sales right here, right? Your stop loss, maybe you could have even placed it higher above, higher, a little bit higher above this supply zone, a little bit higher above the supply zone, or just there, just to be safe. Then they dropped. So even 15 minutes could have also given you a very beautiful sell. So either there or there, you would have caught yourself. Same thing here, as they were giving this pullback, they do it in form of internal bullish order flow. So that internal bullish order flow, you can actually see it more clear on your 15-minute or 30-minute. Once you go down there, you can actually get to maximize on so this was now, I think it was now around October. So you realize that since February this year, since February 2023, which is this year, Crash 500 has been in bearish order flow, maintaining bearish order flow, meaning majorly, if ever we are to give a report of what Crash 500 did this entire year, we can simply say it has been in bearish order flow ever since February. Major external bearish order flow since February. So that has been where the money is. That has been where the money has been there on that bearish order flow perspective ever since February this year. So even here, they came into the supply, they did a shift inside. You have to be so observative to see most of these inner shifts. So observative to see these inner shifts starter. They did a shift here. So this inner shift, it was more visible on a 15-minute perspective. 15-minute perspective, you could have gone down there. This was now October now. October, just 2 months ago. Just a month ago, I mean. Just a month ago. Most of you were busy taking wrong trades at that time because of a lack of understanding. So lack of understanding will cost you a lot. Cost you a lot on the market. Lack of understanding will cost you big time. So yeah, this is where the shift happened on a 15-minute. That was a simple entry. Simple sell. So this sell, you could have targeted the previous leg, but remember, take note what I said. You can maximize by following the structure, right? You can follow structure, that internal structure up until where it changes, because where it changes, that's your new law. Like here, if you follow that inner structure, which is this one, ta, 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 uh, ta, 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 like this, where they did that interchange, like right here. That's where you were gonna pull out of your cells right there. You could have pulled out of your cells there because they could have given you a pullback. That's why you see after doing that, they gave you a pullback. You would have done that, but take note, we are still targeting this swing leg. So this bearish order flow will keep on being bearish like that. They'll keep on maintaining that bearish order flow up until they finish taking out their swing leg. So even this going up, you see on 15-minute, it's so clear that they were going up, 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 up. Where they did the change right there, that was your opportunity to enter. That was your opportunity to enter sales. Their shift, they actually did it right here. This was the previous leg, that right there. That's where the shift happened. After the shift there, they pulled back into certain zones, and they kept on going up. Right here, you can actually see this was a breaker block. Breaker block that could have also been your drawing like that. So they came to the breaker block, dropped, drop, drop, drop. So this entire time they was targeting this leg down here. So even if you entered, let's say, and put your stop loss maybe above this supply that you're seeing here, or let's say you take your entry on this fair value gap, which was the best entry that you could have taken was there on that fair value gap, right? Because after this inner shift, they pulled back. This was all liquidity. This was just a liquidity build-up. So an understanding of liquidity is also helpful because it also helps you to eliminate other zones and eliminate other entries that might not be taken because of liquidity. This was an entry as well. You could have targeted this or the swing, which is this one. But it was okay, all good. So the most important thing is for you to understand your structure. Don't allow these lower time frames to confuse you by the amount of noise that they have. Don't allow them to confuse you or confuse the way you look at structure or the way you look at levels. Because once you're confused about the way you look at levels or the way you look at structure because of that. So yeah, they fail to break. As I said, that failure to break is an opportunity as well to sell again because they haven't taken out their swing leg. So if they haven't taken out their swing leg, they'll keep on selling up until they take out their swing leg down here. So that swing leg had to be taken out. So they kept on selling. This was your trade that you could have held all the way up until they took out the swing leg. This entire time you could have simply followed structure. Following structure, you could have simply if you follow structure nicely, this was a low because it did this inner shift, this was a high. So you realize already here, you can see something that is so profound that you could have taken advantage of. This was a lower low. It did this inner shift. This was a lower high. Where you could have also sold. So right here, after taking out this low, you could have sold there. After taking out this low, you could have sold again right here on this supply. They came to this supply. Extreme supply entry. These are now just entries that you're entering as we are now going. As you are now going. So here you could have sold as we are now going. Because remember, we want to take out this leg. After this break, obviously you anticipate a pullback. That's a low. This is a low. Once you now have this low, they can give you a pullback. like that to establish a high. Right here, you can see they created a sort of like a level. Right here, like this, tapped into the zone. Most of these supplies were mitigated already up there. That's not the real important thing. On 15 minutes, if you go there, you realize that there was an inner shift right here, an inner shift. That inner shift would have given you these cells coming down. So after this inner shift, that's a confirmation to say that leg or that high, we're no longer anticipating it to be taken out to the upside. So they did come back, tapped the fair value gap and dropped. So those are just opportunities that you're now harnessing. But take note of where my analysis started from. Started from the daily. All this entire bias of saying we have to keep on going down. We have to keep on going down. It came from a higher time from bias that I had or that I established. So something here, I'm still on the 1 hour. Still on the 1 hour like this, right? If you follow inner structure, right? Let's go to the 4 hour, which is less noisier, right? For analysis. Less noisy for analysis. So when you focus on those time frames that are less noisy for analysis, it will help you a lot. It will help you a lot to know what's really going on without any form of confusion on your side. So this is 4 hour. 4 hour, so clear. So clear. Where did the inner shift happen? This was a low, this was a high. Where was the previous low? Was this one? Uh, so this is the 4 hour time frame. 4 hour time frame. This is the 4 hour time frame. 4 hour time frame. As you can see that. So where did the inner shift happen? 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 Let me go down. Let me actually go down so that you see what I mean by an inner shift and what I mean by a change of character. Once you now have a change of character, it means you now have a new swing leg down. Once you now have a new swing leg down, we have to go up and create a new swing. So, meaning in this current case, this is our still swing lower high that is still holding. So if it comes all the way up there, give us a change of order flow up there. We'll just take ourselves from there. But so far, we shifted from bearish to bullish. So where did this shift happen? That's what I want you to now learn and understand now. So if you follow structure, this was the low. That was the lower high. That was the low. That was the lower high. That was the low because it did this in a shift. So instead of creating a lower high, it actually came and broke that previous high, which is what I'm saying. That's a change of character now. That's no longer maintaining bearish order flow. So that sign now, it's a sign that you must be so educated in terms of structure for you to know such levels like that. So right here, that's a change of character. That being a change of character means we now have a swing lower low. Once we now have a swing lower low, the market will go up and create a new swing high up there. So right here, the first major level that I'm anticipating after this change of character, the first major level that I'm anticipating mitigation before a continuation is this demand here. This other demand was tabbed, so I'm not anticipating that. I'm anticipating this one right there. So even the anticipation, I can draw the zone like that, which is okay. But the most important thing is for me to analyze the structure also as it will be moving wherever it will be. Because if you don't have an understanding of structure, sometimes they can even come to another zone, tap into that other zone and drop. So even this pullback, right? As they'll be pulling back, remember they pull back in form of sort of like a bearish way up until they tip into the region. Up once they tip into the region, they'll give you something like a shift there. So, but that's real. That's my first zone. So the real shift, this shift, I just want to see it on a 15-minute, 30-minute perspective. So right now coming down, we have this. If we now follow and look at inner structure, we follow and look at inner structure. looking at inner structure, you have your highs, your lows, your highs, your highs, your highs, your lows, your highs, your lows. That's inner structure, inner structure, inner structure. It changed today. So that change, they established this new law like this. Then the lower high is going to be the either they can even come around here and create the lower high, or even up there and create their lower high. So even if they come in here or there, we don't care about that. So they are now flowing in bearish order flow. They can even come pull back again to up until they tap into their zone. Once they tap into their zone, all you need is a shift on 15-minute. Once you see that shift, it's a confirmation to enter. It's a confirmation to enter that buy. But basically, our order flow is now bullish, meaning we are now looking forward to buys on crash 500. We're now looking forward to buys on crash 500. So, guys, let me just go back to the 4 hours so that you see all the opportunities that were presented for this entire year of 2023, ever since February. All the opportunities that were presented on Crash 500 that you were supposed to harness, that you're supposed to take advantage of this entire year from February. Had you been having this understanding that I'm giving you now, you'd have actually maximized on most of these opportunities. You'd have actually maximized on most of these setups and most of these opportunities. What makes people not to maximize on opportunities is the fact there's a break in understanding. When there's a shortage in understanding, when there's a lack in understanding. So this was from February. Notice how it gave these major cells, next major cells, next major cells, cells. And I also showed you how you would have harnessed these pullback buys, how you would have also taken advantage of them. Right now we are here. As I said, this is our previous lower high like that. So it can still give us buys maybe to around a level up there. So all these opportunities were opportunities that you were supposed to. So this one is also in confluence with the 1 hour zone that I drawn. So it's actually, so here you can see they've tapped a zone, which is actually where they can actually decide to drop from around there. They can actually come down, but that's a zone where I'm anticipating some action right there. So guys, even up there, they can even come all the way to the fair value gap before they drop. So all of these are zones that I'm just prepared for the market to push to. Especially here, this is equal highs, meaning if I'm going to look for a zone, I'll look for a zone above the liquidity there. Equal highs, that's liquidity. So if I'm going to look for a target zone, I look at it above a liquidity zone. Equal highs, so meaning this also supplies also a very conducive target for our buys. It's also that one. So Crash 500 is presenting a very massive opportunity. All you now need now is patience. Patience for the market to come into your zone. After it's come into your zone, giving you all the confirmations, you also now need patience in holding that trade up until it breaks structure up there, breaking structure to the upside, following that order flow as it will be going up. Remember, the best way to maximize on these opportunities is by you following that structure. As you follow that structure, you can actually maximize on opportunities way much greater and way much better than anyone else who is just not well informed about these principles or these concepts. So guys, thank you for being here. Thank you for watching. I will do another video for Boom 500, which is also presenting a certain opportunity that is also serious. I will do it later today or tomorrow. We'll do a Boom 500 video, then also a volatility 75 and also a US 30 gold as well as GBP USD. So I'll do all of those videos. Make sure you're subscribed to the channel. Make sure you like the videos because it will help you to see those videos when I publish them. So this is information that once you now have it. So guys, thank you for watching. Thank you for being here. See you in the next video.